The US tariffs on India in 2025, some of the steepest in history at up to 50% on most exports, are already reshaping Indian economy and testing the resilience of India-US bilateral relations. For a country that exports around 80 to 90 billion dollars worth of goods annually to the US, this scale of disruption is profound. The export sector is taking the first and the hardest hit. The worst hit are going to be textiles and apparel, worth nearly $10 billion and are slowing down already, with factories in Punjab, Gujarat and Tamil Nadu reporting reduced orders. The auto component and machinery industry, a nearly $7 billion export stream, could see losses by nearly half, while Kerala and Andhra Pradesh seafood farmers face the potential collapse of their nearly $2 billion, in fact $2 billion plus shrimp trade. And India's crown jewel, jewelry and gems, traditionally India's pride at about $10 billion in export, are also at risk as US buyers pivot to other markets now. Not just this, the wider economic fallout is just as concerning. GDP growth could dip by 5% in financial year 2025-2026 to 6% from the current 6.5%, which is a significant blow to India's momentum. The rupee, already under pressure, may weaken further past 90 rupees per dollar, raising fuel import bills and also driving inflation higher. This double squeeze, that is shrinking exports and rising prices, will be most felt sharply by ordinary households. The job impact could be even severe. India's textile sector alone employs about 45 million workers directly, and this reduced demand risks mass layoff across industries tied to exports. Financial markets have also reacted quickly. Foreign portfolio investors, that is FPIs, are retreating from Indian markets because they are spooked by this uncertainty and low returns, leading to a sharp sell-off. In 2025, FPIs withdrew 1 lakh crore rupees, that is nearly $11 billion from Indian economy, Indian markets. In August alone, Indian equities worth 21,000 crore rupees have been sold off by the FPIs. That stands close to 2.4. In sum, tariffs are not just a trade dispute, they are a stress test for India's economy, its global positioning and its domestic stability. Beyond lost exports, they risk weakening rupee, pushing inflation further, undermining growth and destabilizing jobs. This is a test of Indian economy and Indian political resilience.